Keith, good to see you today. So you get the jobs report out today. You see the market reaction. How do you put this together in any kind of cohesive strategy moving through October and toward the end of the year?
Well, I'm chuckling because the use of cohesive and Fed in the same sentence don't necessarily come to mind right off the bat. The way I look at this, the data, the Fed, they are as wrong about rates and labor as they were about transitory. So I look at a report like today and say, where can I buy that makes sense given a longer term time horizon? Chips are getting shellacked. I don't think the Fed's on target. So I'm going to go into the fight, not away from it.
Okay, what does that mean to you? How are you getting into the fray?
Well, for example, let's take AMD. Revenues are still up 29% year over year. Everybody's flipping out because they supposedly aren't going to meet guidance. Well, you know what? That's the sign of prudent management. They're adjusting ahead of time. 90% of the world's data has been created within the last few years. They are a key player in managing that, and that genie is never going back in the bottle. So I've got a longer time horizon. That's that's right on my radar. That's the kind of thing I like to buy when the markets gets carried out feet first.
Well, you can see how the stock is reacting today, down 12% as AMD pre-announced revenue and margins that were lower on weaker client segment revenue. This pre-announcement stuff is just, I guess it's what? Take it on the chin early, don't wait for earnings?
You know, I think that's one way to look at it, but I look at it this way. Companies figured out by accident last quarter that they can engage in the politicians' game, spin control. So they're coming out with preemptive announcements, trying to mitigate the damage ahead of time. And, what they should be doing is saying, hey, look at all the other stuff that's actually still working for us, but they're missing that opportunity, in my humble opinion.
Let's talk about a couple of stocks that you do like right now. I think AMD, you have a somewhat contrarian view on that may do better than they thought, but Pepsi is another one you like.
Well, Pepsi and Tesla both. If you're not paying attention to stocks like this at times like these, I would submit that you really aren't in it for the investment. You're in it for the specialization or the Las Vegas style trade. These companies are both in high demand from consumers. They both got great numbers on the table, and all of everything else is a sideshow, Tyler.
Well, so what is it? A lot of people are down on Tesla. It's been down for a long time. What do you see as is it trucks that is going to be a big thing for Tesla, you think, or? Well,
it's much more than that. I mean, the only thing that poo-hooers have gotten right about Tesla for the last decade is they've continually underestimated Elon Musk. What the street doesn't like about him is the fact that he plays by his own rules. He's got the cash to do it, and he makes bold, sweeping moves at times when the market doesn't expect it. So I like a maverick. I like that idea. It's returned thousands of % over the last decade. He's into electrical trading, car production,
Do you like a maverick who arguably is overpaying for Twitter?
Yeah, I don't know that you can fairly say he's overpaying for Twitter because you don't know what his plans are any more than I do. So I agree with you. I think that's currently the question on my mind, but it doesn't bother me because I think he's going to reinvent that space, and he's got something in his mind that he hasn't yet made available to the public. All right,
well, we will see. It is going to be interesting to see no matter what. Keith, thank you so much for your insights today. Keith Fitz-Gerald, we appreciate it.